So one of the questions I've been asked recently is, should you invest in treasury bonds, given that I just talked about high yield savings as well as how attractive interest rates are currently. So today in this video, I'm going to answer that question. Should you invest in treasury bonds? Everyone seems to be looking for a place to park some cash these days in order to earn some meaningful interest. My boy asked me about treasury bonds and I wanted to explain exactly how they work. So interest is back in a big way. For the first time in almost a decade, you can earn meaningful interest on simple financial instruments thanks to high interest rates. So let's start with the basics. A treasury instrument can be a note, a bill, or a bond, and it's debt issued by the US Treasury. That means that when you buy US Treasury security, you're essentially lending money to the US government for the duration of the security. For example, when you buy a 2-year treasury note, you give money to the US government, which will pay you back a specific fixed amount of interest every 6 months for 2 years. At the end of 2 years, the security has matured and the government returns your principal plus the interest that you earn on the initial deposit. There are 3 main types of treasury securities: T-bonds, T-notes, and T-bills. All 3 are traded in a highly liquid secondary market known as the bond market. Treasury bonds, notes, and bills all have different maturation rates. Treasury bonds are long-term bonds that mature after 20 or 30 years. Treasury notes are products that mature after 2, 3, 5, 7, or 10 years. Treasury bills are anything that matures in less than 2 years. All of these instruments have pros and cons in terms of investing. They also trade based on the conditions of the overall economy and what's currently going on with interest rates. If rates in general are going up, the rates associated with these instruments go up as well. And when rates go up on these bonds, the prices go down, so making them a lot more affordable to us. In the current climate, we've even seen rates climb steadily due to inflation and the actions of the Federal Reserve. The Fed has raised rates consistently and considerably over the past 18 months. As a result, these treasury securities are producing rates of interest that attract investors. Hence why my boy asked me, should he be invested in treasury bonds? If you're interested in diving into the world of treasury securities, you have a couple of ways to get started. You can purchase these products directly from treasury.gov, or you could go through your brokerage. And while you can buy individual bonds or bills or notes with a robo-advisor, you can buy what's called an exchange-traded fund that ties to either of those treasury securities. So to understand which specific treasury product makes the most sense for you, whether that's a bond, a note, or a bill, you need to determine how long you want your money invested and at what interest rate these products are offering. Normally, the longer the duration of the security, the more it yields for you in interest. But in the current environment, you'll earn more interest from a shorter term product such as a treasury bill than a longer term one such as a T-bond. Regardless of which type of security you purchase, the risk to you is quite low if you plan to hold the instrument to its maturity. That's because the United States has never defaulted on its debt obligations, and the likelihood it will do so in the future remains very low. The only remaining question at this point is, how do treasury products compare to high yield savings account, which I just talked about in one of my previous videos. If you want more information, click here. And to answer this question, I won't say that one is better than the other. They're simply different ways to earn money on your money. So without getting into a lot of detail, I hope this clears up a few things for you. Remember that in this environment, it doesn't make sense for your cash to sit someplace it's not working for you. So whether that is a treasury product or high yield saving, determine what fits you as an investor. What's your financial horizon like? What are your goals? What's your risk profile like? And then you determine where you want to park your cash. So to answer the question, should you invest in treasury bonds? It's definitely a great idea if you're more of a low risk investor. And again, with the different types of products, a bill, a note, or a bond, if it matches your investment horizon, it can work for you. But if you're also someone willing to invest in a high yield savings that has more variable rate with a little bit more higher interest, and if you're willing to take that risk, then again, that will work for you. So again, to answer that question, yes, you should, if that works for you. So guys, if you want me to go into more detail about treasury products and how they work in detail, leave a comment below. If you want more feedback and any of their products where you could park your cash, leave a comment as well. If you've been watching these videos and keep on my channel, guys, do me a favor, share this with a friend, and please subscribe. See you next time.